And we are live. What's going on, everybody? Welcome back to Wolf. Welcome back to ETF Tracker. Welcome back to another space or another stream talking all things going on in the stock markets, in the Bitcoin world, in all the things. We have the stock market at all-time highs. Everybody's happy. We are in the middle of a World War III, Iran war, oil crisis, and the markets are happy. I guess everything's priced in. I'm not sure what's going on. We have Bitcoin performing very well at in the 74, 75K range, up a good amount this week, about 5% in the last week. All across the board, interesting stuff is going on with Goldman Sachs entering the Bitcoin arena with their own Bitcoin. They just filed for a new Bitcoin ETF, a premium income ETF. We've got a few rich people giving their thoughts and debates on AI and how it's going to be integrated with Bitcoin, if it's going to be a factor against or for. And so we've got some interesting topics to dive into. We've got Mr. Thomas, of course, our co-host for the show, to dive into all the things. Thomas, how's it going, brother?
Doing good, man. Just got to embrace the pump. What can you say? It's on. Just embrace
Absolutely.
it.
Yeah, exactly. Embrace the pump. Embrace the pump. Guys, if you haven't already, if you guys are here watching with us, please do take a second and repost the stream wherever you're watching. We really do appreciate it. If you're on YouTube, definitely hit the subscribe button, leave a comment. And if you're in the chat and wants to take a look at anything in particular, just let us know as we dive into all the things. Big shout out to Rex Shares, of course, for sponsoring today's show. We'll show a couple other interesting ETFs, especially those single stock, double leverage ones are cooking today because the markets are up, brother. The markets are up. So anyways, I figure we'll start with this one. You sent me this a little bit ago. Maybe I'll just let you introduce this one. And I'd love to get some of your thoughts just on the current state of the market.
Yeah, sure, man. I mean, look, this is very interesting. We've got this is a chart showing the best 10-day gains. Really like historically going back 100 years, right? And you can see that this little period we're just in, it's the best in 6 years. You know, this is really since those COVID lows when the market was wild in, you know, going crazy in 2020. Like this was the precursor to it. And I think what's so interesting about this is the similarity when you look back at this time period and the March 2020, April 2020 period. The two things that they have in common is that everybody is like, this shouldn't be happening. It has all of the similarities are so good because if you go back to 2020, it's like pandemic, COVIDness, the economy is destroyed. It's all doom. And then you just go on this like out of nowhere pump. And then you got here where, you know, peace hasn't arrived in the Middle East, right? Oil prices are up. It's supposed to be bearish. And yet the market will just rip in your face. The market will just rip higher in your face. And I think that it's really interesting the type of investor you are, because some people will look at this and they'll be like, no, it's wrong. Like it's not right. The macro economy shouldn't do this, yada yada. And then other people will just be like, kind of feel the vibes. You know what I mean? It's in like you sort of see the market. You have to like listen to the market. Like, what is the market telling you? And there's so much information in there that you can't necessarily. You don't like. It could be the market is already getting whiffs of money printing. It could be the market is already getting whiffs of peace coming that hasn't been announced. Because frankly, there's so much like insider trading stuff that's happening that drives this stuff. You know, we're on the outset, you're just watching these big macro price moves, but you don't really know what's happening. But the important thing is to listen, because like the signal is there, even if it's not obvious why that's happening. That's why you can't like. It's a really interesting setup, and of course, and we'll get to this as well. But people are bearish, right? The amount of times this happens, where you get the contrarian play, like when everybody is super bearish, that's when it rips, and then when everybody is extremely greedy, that's when it dumps. It's almost like a law of the universe. The way that happens. it's hard to explain, and yet we've just seen it so many times before. So yeah, we're witnessing something very interesting here. We've had like, well, I mean, this is a day old, right? So this is the 10 days, and then market's up again today. So you go back to 11, like just basically 2 and a bit weeks of just outrageous pump in the market. Stocks are at all-time high, and yeah, Bitcoin is back pushing 75K again. It's getting dragged along with the market as well, and there's lots of talk about, I guess, in that domain as well, which I'm sure we'll get to. But yeah, it's been a fun week. How are you going, Kay?
Yeah. No, I was going to say, I mean, honestly, I didn't realize we're at all-time highs until somebody had said something, or I'd seen a tweet about it like earlier today, and I was like, oh crap, wow. Like I knew we were trudging up, and I knew we were sort of just making moves, and the markets are doing well. And like it's one of those things, like when you're in the markets every single day and you're in like despair mode, it feels like this is just the new norm and we're cooked and it's just never going to reverse kind of thing. And that's right around, and it's tough because that energy can last a little while, but it doesn't last forever. Like it always ends up, you always end up reversing, right? Like it always, I think that's why people like, Larry Fink have gone on recently even and been like, look, historically, literally every single dip has been a buying opportunity. Depends how long your time frame is, of course. But at the end of the day, and I know it's tough because like if you're bearish on stuff, it sort of feels like a Ponzi. You're like, okay, so like basically you're saying like out of your own necessity, out of your own best interest, just like invest in us, like just believe in us. I know we kind of bail each other out. Like the banks, like we're cooked for a little while. We sort of over leveraged a few years ago. It was kind of a scam, but like, we always fix it. You guys always get the scraps and stuff. You guys make a little bit of money, like no problem. And so like, I've seen a little bit of bearishness from like the Bitcoin side of things. I think maybe there's a little bit of like, damn, Bitcoin's at 75K, stock market's at all-time highs. We should be closer to six figures kind of thing. And so I think it depends which circles you're in, but ultimately, dude, I'm down. The stock market's going to shoot up to all-time highs, and it's April right now. A lot of the Bitcoin people were thinking, hey, it's going to be kind of like brutal. It's going to be a brutal grind up until like October if we're going to follow the 4-year cycles. But we'll see what happens, man. I don't know if anyone could have predicted a war. I don't know if that's been priced in. Like I don't know how these things actually work. We got the hedge fund. You sent me this clip here as well. I'd love to get your thoughts on this and open this up. But the hedge fund's positioning as well since Liberation Day. Lows. I mean, this is crazy right here.
Yeah, so I think this is really important because it kind of gets to the whole story, right? Which is hedge funds. So this is the long-short ratio, which, in other words, the fact that it's kind of lower at the moment means that hedge funds are more short. It represents the fact that it's like a way of measuring the market and showing people are scared, people are short, people are in cash, people are short stocks. They're not in the long position. Like they're not greedy, they're fearful, essentially. And it's in that environment, which is when you get that mega pump. I mean, look at that actually. It's so perfect how that chart has played out. They were the most long late 2025 when we were kind of at the sort of local top. And then as the market starts dumping, the longs come off until we're at the most short. And then that's when the market rebounds. Classic signal, like this is literally textbook stuff. If you go to your finance textbooks and you read about like this is exactly how it traditionally plays out. And by the way, for some structural reasons as well, it's not just, I think sometimes people don't necessarily like this stuff because they think it's a little bit kind of a little bit like woo-woo, like a little bit like, oh yeah, when you're greedy it's bad, and when you're fearful it's like they don't really understand it and they're kind of skeptical. But actually it's really logical and really structural, because what it is when people are scared, they're out of the market and they have tons of cash they can deploy. So there's the potential, there's like a build-up of buying power because they're out of the market. So the buying power is sitting out, and then as it comes back in, it's like a tidal wave smashing the market and the prices go up. Whereas when everybody is already like super pumped up and super greedy and super long, all the money is already in the market. So they don't actually have it's you're all sitting around going, yeah, price is going to go up because everybody's going to buy it. But then you're sort of looking at, are you buying it? Are you buying? Are you buying? It's like, well, no, because I'm already invested. So it's like, like no, like it's like last year, all the Bitcoiners, it's 120K, and it's like, this is so bullish, this is so bullish, and then it's like, well, are you buying right now? Oh no, I'm in. Like, what are you talking about? Are
Of
you buying?
course.
Nobody's buying, because everybody's already bought. And then it's the flip side, right? When everybody's short, it's like we're all scared. They're scared, but then someone gets the signal, like, oh, actually, maybe now's the time, and then they go in, and then it's like, oh, it's starting to pump. Better not miss out. And then suddenly all the money starts flooding in. So it's very logical. It's not just like woo woo. Oh yeah, when things are fearful, that's a good time to buy. It's like no. There's very structural, mathematical, if that's your thing, like logical reasons why it plays out this way. But it's amazing how often it does. And of course, the thing as well is, to be fair, which is like the counter is, it doesn't always. And because the world is fundamentally unpredictable in the sense of everybody was positioned short, but if last week Trump dropped a nuclear bomb on Iran, yeah, the markets would have gone down. Like,
Yeah.
yes, everything would have been, it would have been much worse for all kinds of other reasons that we don't even have to think about markets. But the point is that it is possible you can have a situation where people are bearish and the price still goes down. Absolutely. It's just more like good kind of rules of thumb about how the market plays out. Of course, the world has to align with that, but you can kind of position, you at least get a hint. You get these little hints along the way. I remember, Cade, we saw, and we've clowned, like, I certainly clowned like Tom Lee a few times on this podcast, but he made this point a month ago or something when we were chatting, and we were talking about this video where he's like, when you look at these wars historically, the market bottoms in the first 10%
Yep, I
of the way.
remember.
Yeah,
Bro called it. Bro called it.
He absolutely
Pretty
called
crazy.
it. And to be fair to us, we did say we actually agreed with him.
Yeah,
like
I remember.
We weren't fighting him on that one. Like, he called it, but we also said, like, yes, actually, historically, that's right. And when you look at it, it looks like it's played out exactly that way. It's like the most fearful stuff is at the very beginning. It hasn't been sorted yet, but a lot of the downside news has been taken out of the market. I mean, for starters, right, the Strait of Hormuz is already closed. So not too worried about bad news in the sense of, like, well, the strait is closed. Like, what? How do you position from here? Like, there's potential good news. There's potential they unlock it. It opens
exactly.
up. But there's
like
not
the goalpost moves a little bit. Like, good news is like contextual,
Well, the good news is contextual, but also it's like, what are they going to tell me next week? The strait is closed.
Right.
I know the strait is closed.
Right. Interesting.
The potential shocks are on the upside. Like, maybe they open it, in which case, great, big news. Or maybe they close it, maybe it stays closed, but it's already closed. So it has this, like, kind of different asymmetrical movement thing. And it's very weird, but it's pretty cool.
Yeah, shout out to Tom Lee, man. God, I mean, the brothers made 1,000 predictions, but this one, I remember when he made that one, I was like, this one feels different because it's backed by data. This is more, it's I don't know how to put it. Like, it's like a specific type of claim. Like war is not exactly happening every 8 seconds. And so he's like, hey, like, when we have had war, we look back, we're able to see this. Like, this is how these things kind of play out. Oh, why is my camera moving?
Also, this is like part of the game when you're going on TV, right? Like him, you put in, like, really good, you provide specific valuable insights. You go bang, 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 good knowledge, and then people go, this guy must know what he's saying, and that's when you slip in the Ethereum's going to 100K next year, And that's when you get,
Yeah.
you know what I mean? It's like the old like sales funnel where you get someone going like, you know, well, you need a new car, yes. Oh, and you like a red one, yes. And you know, you love leather seats, yes. So
Yep.
you're willing to pay 200K, yes. Oh wait, no, like it's the yes, 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 and then it's that kind of thing he does where you know you provide lots of like, here's some good insight, here's a good insight, here's a good insight. Now I'm going to slip in, oh yeah, you know, let's go on 100K and buy my stocks, and yeah, and it's
Yep.
like, oh okay, well, but
That's funny. No, 100%, 100%. There's other ones. So talk to me a little bit about this sector of the market. So this is a post from Eric Ball. I think you say Balkunas. Is how you say it?
yeah,
But yeah, tell me a little bit about this part of the market and the performance here.
yeah. So what's interesting is that this is so it's a new ETF that's launched, and what's interesting about it is it's kind of a brand new sector of the market because it's like a sub sector of AI, essentially. And you have to go really deep in the weeds on this in order to really understand this. But that's why like it's done so well. It's this idea that you know these AI models are huge data intensive models, and you need the GPUs, which we know NVIDIA build these, and they have the compute for the models. But what you also need is a lot of memory, data memory, to be able to, because there's such big model, like these are massive models with so much information, and you don't just need the compute, you need to be able to move the data around. And so that's actually become like a bottleneck in the AI build out, this memory issue where you have the compute, yes, but you also need the memory. And so there are a bunch of different companies which are trying to build the memory, like expand the memory offering to build the chips to enable this to happen. And this is like so you know, we're talking niche of niche of niche, this sector of investing, right? It's not just AI, it's a
Yep.
specific part of AI, which is interesting because you have other niches of AI. You have the chips of AI, you have energy, you have you might have the application layer, like you might be bullish on AI, and so you're like long, I don't know, Meta or something like that. So
Mhm.
you have different niches within AI, but this is the memory subsector. But what this ETF has done has basically packaged up a whole bunch of these different companies that are working on this problem and put it together into an ETF. And it's already like, so it launched and it is already up like 30, 40%. And what's interesting as well is that it's one of those ones where sometimes it like SanDisk, which is a memory company, it ran like 600% last year. So it was
Mhm.
like in 2025, it was like the best performing stock. And then it's up like 300% this year. Like, as in, it's a funny one because it's like, all right, you know, that was the thing, but surely it's done now. And then it's like, no, it just keeps going. And I mean, I don't like, I don't like, I'm not going to pretend I'm an expert on this one or can like give people advice on this thing. But what's interesting about it is that there are clearly some autists out there that just know a heck of a lot about AI. Like it's the kind of thing. It's like you can become an expert. You read 5 books on this, suddenly you know more than 99.9% of the market, and
Yeah.
you actually understand what's required in the build out. And if you can get ahead of the market just a little bit in terms of knowing, like, yes, we all know AI is the next big thing. Everybody knows that, but how do you invest in it? There are people out there that figured out 6 months ago, well, actually, memory is going to be this big. It's a big blockage. It's a big supply constraint. Like we need all of these different pieces to be expanding all at once. It's a bottleneck. And memory is this bottleneck. And of course, what happens in a bottleneck? Prices go up, demand goes nuts. You have all this kind of stuff. It becomes critically important, and your stock price goes bonkers. And so people figured this out. Now, I mean, is it late to this? Is it early? Is it right on time? I don't know, to be honest. I think it's extremely interesting. Like, I love reading about it and learning about it, but I don't have a hot take on, like, as an investment thesis, just because you need to go deep into the weeds on this in terms, like, it's run really hard. It's certainly a play like you wanted to be in this 6 months ago, but also, you talk to some people, like, the thing is like, we might well, chances are, when you look at the arc of history, we're in the very first innings of AI. I mean, realistically, like, what we have right now is extremely useful, I would argue. But, like, think about what AI is going to be. I mean, we're talking about intelligence here. So think about there's no limit to the usefulness of intelligence, like that. And it should only just expand and become a bigger piece of it's like the generalized thing of the GDP. It's like GDP is literally capital, labor, and intelligence. Like, that's kind of all. I mean, the macroeconomists or whatever call that technology, but really, you got capital, labor, intelligence, and that's like the three things that determine how big your economy is. And basically, as you max out the use of labor, and you still have that capital, but the point is that this is like going to infinity in terms of the usefulness of it. There's no cap on this, so theoretically, we should still be in the first innings of this whole intelligence story. And with that, you would expect potentially there's still some juice to run on this kind of stuff, but I don't really know. I would like wanted to bring it to our viewers' attention, because some of you are going to be savvy enough to go and really do a deep dive on this stuff, and also even like pick some of the winners, right? Because also when in an ETF like this, it's going to look at 10 companies that are building out, trying to solve this problem. And if you're really good, you'll be able to go, actually, I think it's this one and not this one, and not, and you have to be, maybe you have to be an expert, or maybe you just have to be willing to put in the time to really grind on a specific thing. But, like, the opportunities are there, man. And it's like, I mean, that's why we're in this game, right? Like, it's looking for these opportunities. So just want to bring that to everyone's attention.
No, 100%. I also think, I think it spawned my head when I saw that, BlackRock and I think BlackRock, either there's two companies, or is BlackRock coming out with two different ETFs, but they were like, hey, we're going to start putting out some products that we think can compete with what's sort of been the big boys. Like QQQ is like one of the ones that everyone just knows the name of. And I was like, dude, in 10 years, I think, like, there's a clip of Elon Musk saying, he's like, I expect our economy to be 10x the size it is today. And I was like, brother, what does that even mean? Like, and what is the industry is going to make that? How are we going to expand to that level? What's that even going to look like? Like, is our companies going to be valued the same? Is the economy going to be run the same? Like, are we still going to have like things like quantitative easing? Like, what are the terms we're going to be using at a market that's 10 times the size of this one? Is it going to fracture? Is it going to still like how are people going to invest in 10 years kind of thing? And we got things like this coming in. Like, this is fascinating to me.
Well, Jeff Bezos, and so, we're talking about the smartest people in the world, right? Jeff Bezos recently had the quote where he said he thought that the AI to AI economy, as in two different intelligence interacting with each other, that economy was going to be larger than the human to human economy. And what's interesting about that is, if it is the case that theoretically could be larger than the human to human, then it's like infinitely scalable, right? Because if it's true that AI to AI economy can be larger than the human economy, then it's also true that the AI to AI economy could be 10 times larger or 100 times larger, because it's all digital, right? Like, there's no if it's off doing its own thing, building itself, building like a hive of economic energy in this world, like, there's no reason why that can't.
Yeah.
Where's the cap? What's the scale? I mean, I guess the only real, this gets back to our previous point about what's the bottleneck that stops that from just expanding infinitely, and that's where you go, okay, the bottleneck might be the energy required to use the AI, or maybe it's the memory required, or whatever. So you still might have these real world physical constraints, and I guess that's what we were getting to a second ago. But the point is that this thing can scale to kind of in sort of almost unimaginable ways potentially, and that's kind of and that's coming from, these are the guys, like, they have really high credibility is what I would say. Like, we're talking about Jeff Bezos and Elon Musk. We're not talking about like, hype poster on X or whatever that's like trying to get like looking to get likes or retweets on their posts because they're just like looking to get some more.
Elon also was able to get inside info on like the whole Doge stuff when he was working in the government. He went on Joe Rogan, I remember, and he was like, dude, if you guys saw how people are making money, I mean, he's like, it is straight up fraud. And even after that, he's like, look, the market's still going to be 10x. Doesn't matter. You can't stop it.
Right.
So
yeah, well, that's the other interesting thing. It enables these kind of power laws, right? Because the weird thing about our economy is, even putting aside the AI stuff for a second, the world operates on these power laws where, like, 10% of the people produce 80% of, well, I think it's 20% produce 80% of the value of our economy. Like 80% of our economy is produced by 20% of the people. And then with that, you can go even like the power law again, where it's like, of the 20% of those, 80% of that is produced. So it like, you end up getting like 5% of the people produce 65% of the economy. And it has this kind of, these weird power law things. And I think his point is, even when you have kind of fraud and grifting and, governments, taking from you and spending inefficiently and all that stuff, the AI tools will enable the really efficient people to work so much better, and they're the ones that are producing everything. I mean, imagine, like, you could have all this kind of inefficiencies going on, but imagine if like AI just enabled, like, I don't know, let's say Elon Musk to be twice as efficient. Like, think about that. Everybody else is like, but just Elon Musk, you're going to be twice as efficient. It's like, oh, think about the scale of what that man has worked on with SpaceX and Tesla and everything else, right? And it's like, oh, okay. And then you apply that down the line. So it's not just Elon, but it's all of the smartest people in the world. And it really is kind of, that's where you get this huge impact on terms of potential economic growth, I suppose.
Yeah, and it's interesting we bring up the AI discussion, because that was actually going to be one of the lead-ins here. So, and this is a slight divert into Bitcoin here, but we got Arthur Hayes here, and he's obviously done very well, and he's not exactly known for always being super accurate on stuff, but he's not scared to share his opinion on things.
He's had some good calls too over the years. Nobody back 1,000. He's had some good calls.
Agreed. I'd rather someone make the call and be wrong than just not make any calls if they're going to be in the public and saying things and going on shows as an expert or as a talking head kind of person, rather than just make it an opinion even if it's wrong. But he says the biggest problem for Bitcoin is not going to be anything like war. It's going to be AI disruption continues to accelerate. So I'm going to pair a couple videos here. One arguing that AI is going to be a problem for Bitcoin. And then we've got on the other end of it, ex-Wall Street's Jordy Visser saying Bitcoin is completely safe because it has no competitor. Bitcoin is built on code. It's one of the only things that are going to be safe from the destruction of AI. It has no competitor. It's not a business. It doesn't have any fundamentals. There's just no way to disrupt it. So he had a different take. So we'll play a little bit from each one here.
The biggest problem for Bitcoin is not the war, because we can look through that, is this AI disruption, which continues to accelerate. And the result is that knowledge workers are getting fired. A major company, and they're saying, hey, I am more productive using a team of agents than I was before. And therefore, my least productive engineers, accountants, lawyers, or the most junior ones, either I'm not going to hire them in the first place, or I'm going to let them go. And so that, I think, is a bigger problem for Bitcoin, because that is a credit deflationary event.
Okay, so that's the first clip.
Well,
And would you rather comment now or see the other side of it first?
No, let me see both sides. Yeah.
Okay. All right. Here's Jordy Visser.
I have said repeatedly, I think Bitcoin is the only quote unquote thing built on code that is safe from the destruction of AI because it has no competitor, meaning it's not a business. It doesn't have fundamentals. There's no way to disrupt it. I have said.
So yeah, we've got two sides. I mean, he's making a specific claim about the specifically on code. It's going to be the one thing that's safe. But he's basically saying Bitcoin's indestructible no matter what happens to this next saga of human AI cyborg like reality. And we've got Arthur saying he's pretty nervous about what we're going to see here, especially for Bitcoin. So give me some of your thoughts on this. I'd love to know.
Yeah, so I think it's interesting, and this is going to sound like it's a cop out, but it's not, because I want to explain why. I think they're both right, and the reason why is long term. Like Jordy is right in the sense of it is not disruptible from. It doesn't matter how efficient the coding. Like every other software stock is vulnerable to some extent. I mean, even when you look at social media companies, which look like they have these big moats because it's all a social network and it's the network effect. So it doesn't matter how quickly you can build the code. The reality is that their content is distribution networks, and we don't know how good the AI can get at building a content distribution network. Like everything is potentially disruptible except Bitcoin for very actual clear fundamental technical reasons. It's because it's not the code that makes it. It's all of the, first of all, the energy backing it, as well as it's the people that, Bitcoin is an idea. It's this 21 million idea. That's kind of the most fundamental thing about it. As long as the people believe in the idea and you have all of the technical things that ensure in place, you cannot break that 21 million. It is undefeatable. Now, the reason why I think I'll just say that Arthur has a good point is a couple of reasons. One, because even though Bitcoin is an idea, the trouble with Bitcoin is that after it launched for a long time, Bitcoin was the coolest idea in the world. And right now, it's not. It's just not as interesting. It's still interesting. It's still extremely interesting. But if you go back 5 years or a few years, Bitcoin was the most interesting thing in the world.
Yeah.
And then what happened is artificial intelligence came along, and that is the most interesting thing in the nobody. It doesn't matter how bullish you are on Bitcoin. The fact of the matter is, artificial intelligence is just more interesting as a concept, as a future, as a theoretical. What could this do to the world? No matter how excited you are about the world on a Bitcoin standard and having a hard money and all of the potential flaws and fixes that could, fix the money, fix the world, you bought into all of that hype, all of those memes, it's still not anywhere near as interesting as what artificial intelligence can do for the world. And so as an investment idea, it just doesn't have the hype. It doesn't have the excitement. So on a short-term basis, it doesn't capture the attention that drives the adoption in the way that it could in the past, right? Because it was the coolest thing you could, it's a really basic and almost dumb way to look at it. But actually, sometimes you got to left bell curve this stuff because actually that's kind of how the markets work. You don't want to be that middle of the curve. You want to be going actually, this is the coolest thing ever, or, and then you can have your right bell curve, here are the million smart technical reasons why this is the smart thing. But the point is that Bitcoin was the coolest thing in the world, and it's not. Now AI is, and Arthur's right about that in some sense, and that's a problem for short-term adoption. Now, the other thing that Arthur didn't mention, but is very real, is that we have uncertainties around Bitcoin. I will say, I think it can face these uncertainties, but there's a couple of technical problems that need to be addressed. The quantum computing issue is a real issue, and not because it destroys Bitcoin in terms of the network will survive a post-quantum world. However, a quantum computer that comes along and starts cracking private keys would absolutely wreck the price of Bitcoin. It would absolutely, and we don't need to go into that. I think that should be pretty obvious to people that are watching this video. We can talk about that another time, and we've talked about that in the past. However, the point is that there is a quantum threat of Bitcoin, and we know that the limitations for that right now, it's a little bit theoretical and it's a little bit engineering. It's both science and engineering, but we think we can get there.
Yep.
Just like we thought we could get to, just like in the 1990s, people thought, you know, go back and read The Sovereign Individual, and Bitcoin was predicted. We didn't know how to build Bitcoin in 1997, but the people knew, the smartest people in the world knew it was coming. Likewise, everybody is known for a long, long time that artificial intelligence was coming. We didn't know how to get there. We hadn't figured it out yet, but we knew it was coming. Similarly, quantum computing falls in that same bucket where we haven't figured it out yet. It's not here today. We don't know how far away it is, but I think everybody that's intellectually honest with themselves can kind of recognize, yes, it is coming. Maybe not 2 years from now, maybe not 10 years from now, who knows? But it's coming, and that's a really big problem for Bitcoin, unless there's a series of steps that can be taken to make Bitcoin quantum proof and all this kind of stuff, but it hasn't happened yet. So I think this point that, like, hey, if AI comes along and can help speed up and facilitate, because what is AI? It's intelligence. What do we need to build quantum computers? Well, we need more intelligence because we haven't figured it out yet. We need more intelligence. You can see how the two things can be related. You can see how that could be potentially bearish for Bitcoin. So I guess this is where I'm kind of like trying to respond to, like, well, what do you think about it? It's like, well, actually, they both are right in the sense of, in the long arc of it, if Bitcoin can handle the quantum issue, if in the next 50 years, AI won't be able to, you know, Bitcoin is this standalone thing. It's not going to be affected. It's not going to be disrupted by AI. There's not going to be like a Bitcoin 2 that, it's not like the issue. There's no threat whatsoever of like, ooh, the AI is going to build a better Bitcoin. That's not going to happen because if the AI came up with an idea that was like theoretically better than Bitcoin, like let's say it was like, I've got a way to scale Bitcoin better. Say the AI was, you know, because there's lots of problems with Bitcoin, and you could imagine a super intelligence coming up with like, hey, I can do scaling payments better, or I can make it more efficient here, or I can do all these kinds of things, or I can make your wallets better, or I can improve the UI, whatever. Anything that the AI can build can be ported onto Bitcoin. So there's not an issue of a better Bitcoin being built, which is different than, say, the software company. You know, Atlassian has got this Jira product or whatever, and it's like, hey, we can build a better ticket managing tool. We can build a better CRM and replace you. We can't build a better Bitcoin, because even if you do build a more efficient thing here, you've got some new cool thing, we'll put it onto Bitcoin. That's kind of the point of a network that's updatable like Bitcoin, an open source network that's updatable. So that's not an issue for Bitcoin. But we're talking about we're talking about the next year, or we're talking about the next 10, 20, 50 years, because over the next year, the reality is, and I'm repeating myself now, but there is the small issue, but nonetheless real issue. Bitcoin is not the coolest thing. It's not the coolest thing to chat about anymore. It's not, AI has kind of superseded that for now. Now, maybe AI stalls out and we get some other news in Bitcoin and that can change. But right now, just calling a spade, that's how it is. And what do you think?
I'm kind of in that boat. I think Bitcoin has a couple of moments where like it was kind of it's almost being like stress tested now with like the Iran war, when it was like this whole thing. I'm not sure how much the real world cared about it besides like the Bitcoin world and all of us on Twitter of, Iran now accepting Bitcoin as a form of payment during this trying time and issues of all these, super inconvenient ways to get paid. Bitcoin is going to be an avenue for that. I think a lot more people like the Larry Finks of the world saw something like that and they were like, okay, cool. Our theory is being played out right here. It is a viable way to get paid if there's, and it's an important way because it's not held. There's no Ethereum foundation for Bitcoin kind of thing. This actually is pretty interesting. And, it's tough because, in the Bitcoin world, we wanted it to be the end all be all. I have a feeling it's going to be an end all be all amongst 1,000 other ones. It'll be a super helpful one, really important. But like you said, there's going to be something cool every few years, every 10, 20, 30 years. It's going to be a new huge invention. We're running around and we've got like cyborg like realities where the online world is like not transcribed, but it's like you have the glasses where you see someone across the street, their Instagram bio pops up. Like we're gonna have things like that, and so there's gonna be all sorts of crazy tech stuff that comes. But I think there's definitely gonna be a time where things like gold and Bitcoin are going to be propped up as like, oh my God, that's a super important part of your portfolio, way more than it has been. And by then, probably Bitcoin is already, way higher than $2 trillion market cap. And so it's a little bit more like established, I guess. Like right now, I think people still think, as they should, it's the fact that it's been only like less than 20 years and it's at where it's at is really impressive. I'm not in the camp of like fidgeting around and I'm annoyed that it's not here or there yet. I'm like, dude, to get to where it's at from some random concept of an idea, for it to take fire, it accumulates value to the point where it's in the tens of thousands. It's pretty insane to me. Like I'm pretty happy with that progression. I'm cool with it. Like I don't need it to be at $1 million. Like there's a lot of Bitcoiners who are frustrated that it's not higher. I'm like, dude, this is difficult to do it. There's a lot of factors here, and not to mention the financial world and the banks and all them. They've got their own incentives. They're not exactly that incentivized to make Bitcoin a huge thing. It's gotten to this point where they're like, okay, everyone's like kind of aware that it's all cooked. They're all kind of aware that in 2008 everyone got bailed out. So they're like, okay, we do need to keep this in the back of our head. We don't necessarily want it to go to $1 million yet. We need to see if it's going to be the answer. We're going to accumulate long term here. We're going to put out some ETFs. We're going to see if there's interest. We're going to make sure we got a bunch of Bitcoin in that scenario. So we're going to be the benefactors of it. And so I'm kind of with you there, and kind of along that same thread, we've got, okay. Sec. Camera just a moment. 1 second.
Technical issue.
I love how Sam Baldawi's my face here and not myself.
You're back.
Hold on. There we go. I think. Let me switch over to this camera. And 3, 2. Let's see if it holds. We're back.
Yeah,
Sorry. So as I was speaking before my camera fell, with Goldman Sachs with their new Bitcoin ETF filing, premium income ETF. There was also another clip here I wanted to play, and this is the CEO of Goldman Sachs a little while ago. He's talking about just the Bitcoin and crypto world in general, kind of his thoughts. Just like a quick second of how he kind of looks at what's going on, and now here they are in a huge way entering the Bitcoin ETF world. Maybe a little late, and how you were talking about last week as well. More than likely, there will be a couple big winners and everyone else is just kind of getting the scraps. It'll likely be BlackRock's ETF. They were the first mover. They'll likely eat up a lot of the market share the same way MicroStrategy did for the Bitcoin treasuries. But either way, here's the CEO talking a little bit about stable coins, tokenized equities, things like that.
Go back to tokenized equities.
Yeah.
Because it's something we're obviously thinking a lot about, and it's super interesting, but it's and look, there are a lot of derivative things that people can talk about, but actually tokenizing equities, it's a complex regulatory problem. And I want to talk about regulatory more broadly, after, but talk a little bit about how you see this unfolding.
Yeah. So, a few years ago, people were.
It ends up going to Brian Armstrong. We kind of know Brian Armstrong's take on it. He's obviously bullish. He's obviously pitted it into his company is a huge benefactor of the sense of working out. But it's interesting, like seeing the CEO of Goldman Sachs there. He's definitely talking about it. And here we are a little while later, and they're deeply involved in the game now, launching their own ETF here. So I'd love to get some of your thoughts on this. I know you're tracking a lot of the Bitcoin ETF inflows and outflows. So you've got a lot on your page, and your perspective is going to be more unique than the average person, I think.
Yeah, sure. Look, so I will say, and we talked about last week how comparing it to say the Morgan Stanley ETF, which had just launched, and I had said I had made the claim that, look, I bet like BlackRock's ETF has already won the Bitcoin ETF market. It's already got the liquidity. It's already got the size. It's already got the first mover advantage. It's won. Morgan Stanley should have launched an ETF 2 years ago. They're late to the game. They might accumulate some money because Bitcoin is a popular instrument and it might be a profitable instrument for them, but it's not going to be material in the context of the Bitcoin market. However, this is a little bit different because, and we're talking about the Goldman Sachs ETF here. It's not just a straight buy and hold Bitcoin play here. They are trying to do the alchemy that we've also talked about, the magic that the golden goose, the thing that everybody's chased forever, which is Bitcoin with a yield. The thing that even MicroStrategy are trying to offer in some sense based on their products. Bitcoin with a yield, which is what you don't get with a straight Bitcoin product, with a straight Bitcoin ETF like BlackRock's ETF. It's a very different product. And that's what this Goldman Sachs Bitcoin Premium Income ETF is, which is, in other words, they're going to go long Bitcoin and they're going to sell some call options, sell some of the upside to try and generate an income stream to go along with it, so that you've got a yield, you've got an interest rate you can look at, and you go, well, regardless of what happens in the price of my Bitcoin, it should be returning 5%, blah 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 blah. So this is really interesting because we don't know this could go so many different ways. This might be the key that unlocks institutional investment. It might simply be that the big endowments of the world, the big insurance companies, the big, pension funds, they are so much in this old school fiat monetary network sense of they're so used to bond investments, they're so used to this world of what is the yield, that this is the product that unlocks it for them. Like, I could imagine a world in which this has so much demand because finally all these boomers that are sitting on the boards of these things, and forever and a day they could never wrap their head around buying Bitcoin because they just go, yeah, but what's the yield? Now all of a sudden can go, ooh, I'm getting 3% on my, even though the price appreciation might be 200% a year. So why do you even care what the yield? They are obsessed. All historically, there's been a certain training of finance investors for 50 years, for 100 years, forever, really. What is the yield? And I could imagine a situation in which this unlocks massive capital inflows, in which case Goldman Sachs could be the winner in this market, not this straight Bitcoin ETF market, but in this Bitcoin yield market. And I don't know. I mean, I will say, personally, I'm curious what you think. For me, I'm not really attracted to this. In my head, I go, I'm going to do this kind of a separation within my portfolio. I want to own, there's the Bitcoin that I want to own. And then if I want to seek yield, I can invest in other things outside of Bitcoin. I don't need to have a Bitcoin yield product because end of the day, I don't really, the only thing that I care about is my total portfolio, right?
Yeah.
I don't really need every individual piece of the portfolio to be doing every little thing for me at any one point in time. I don't need it to be defensive and aggressive and yield bearing and high tail or right tail, but also not, I can have my defensive portfolio, part of my portfolio. I can have my aggressive. I can be looking for yield here. I can be looking for explosive price appreciation potential here. I can kind of cordon that off within my own ideal portfolio. I don't know that everybody thinks that way. I think this might be very appealing to some people. We have seen little signs that the yield thing can be really high demand. I mean, we know we've talked about in the past, like the MSTY product and some of these other things. There have been, and not that this is that, but those things were massive yield products. And you can see some people are really obsessed with this idea. We also know, like MicroStrategy offer their STRC product, which is a straight yield product, which sort of Bitcoin backed, but it's really a bond-like instrument, even though it's preferred equity. And there seems to be massive demand for that product. So there's clearly a section of investors out there, like a subsector, that want to invest in these yield products. So I'm like just going to watch with an open mind. I don't really know, to be honest, but I'm very curious. And I do think ultimately, if it induces demand for Bitcoin, it's good for Bitcoin price appreciation.
Yeah.
Some people are going to... Yeah, I mean, it's look. If it's got, what happens is if it gets capital investment from the outside world that wouldn't otherwise invest in Bitcoin, it's bullish for Bitcoin. It's really that simple. If people start selling their Bitcoin in order to invest in this product, that's not bullish for Bitcoin. So it depends on where it's getting like the demand flows from, and also are the demand flows material, and all of this kind of stuff. But I think it's a good thing. I also think maybe more importantly, maybe kind of burying the lead here, because maybe the really issue isn't whether or not this one particular product is, good or bad or whatever. Maybe what's really going on here is we're going, hey, Goldman Sachs, which by the way manage like trillions of dollars of capital, are clearly putting their brand behind a Bitcoin product and saying, we're happy with Bitcoin as a product. And they want to create their own derivative product and do all this kind of stuff. But fundamentally, they're putting the Goldman Sachs name next to the Bitcoin brand and going, we support it. And so maybe that's the real story here, because what Bitcoin ultimately needs is the financial advisors working at Goldman Sachs and all of these big institutional capitalists to go, yeah, there's no career risk recommending someone invest in Bitcoin. Like, why wouldn't I tell my client to buy some Bitcoin? And if that starts to get into the zeitgeist of financial advisors, investors, the career risk shifts from, I can't, even though I think it's a great investment, I can't possibly recommend it, to actually, it would be almost embarrassing if I don't recommend it. That's when you get the big shift. So maybe that's the big thing to take away from this year is like, look, the product might do well, it might not do well, but clearly Goldman Sachs is going, Bitcoin looks good.
Yeah. For smaller, like if you're just like a normal person, and like if it's one thing if you're if you're managing like a 7-figure portfolio or something, and you allocating 5 to 10 or 1 to 10% of your portfolio is going to be enough to, like, for me, the yield option is there if you're playing around with an easy 6 figures for that specific part of your portfolio. Because I'm like, dude, if you're operating on a $10,000 position and or $20,000 position, and you're putting in 5 to 10% of that, and because you want to generate yield for passive income, I'm like, brother, at that point, I don't know if you need to be thinking about that yet. Maybe work on getting the portfolio up first. I'm definitely in that category, so I need to get my numbers up first before I think about like dumping everything into dividend or yield bearing. Because you can earn some. I just feel like for the bigger buyers, the bigger institutional buyers, they're going to be cooking with these things. And like, that was always just going to happen. Like, you find, and that's what Saylor talks about. It's like, you find an asset you believe in, and for whatever percentage of your portfolio that you want to hold the actual asset, you do that. And then if you want to generate yield, which is basically the model for Wall Street and literally everything else in the entire market, is, okay, now you take that and leverage it. What can you trust? There's going to be all sorts of options. I think the ETFs are going to be a big one. I think the fear for the Bitcoin is just, they're like, hey, like you're going to have every possible thing to invest in but Bitcoin, and they're all going to be telling you to buy this because they're going to be collecting the Bitcoin. You get a yield. And there's like quotes of, if you don't know where the yield's coming from, you are the yield. You're the yield basically no matter what you do. If you're buying the thing, it might be worth it in your case. But I think they're going to see a lot more of this. I think eventually everyone's going to be in the game. But it kind of depends on Bitcoin. Like if Bitcoin doesn't perform, I think they'll still be out there. But I could totally see. I've been saying this for a little while now. I could totally see a period of Bitcoin quote unquote underperformance, or going through a long period of kind of just like stalemate. Not able to crush all time highs and go nuclear 30%. And the problem is like that has been the argument for sailors. Like, hey, the 30% CAGR, you can trust this, every single year. And if we go through a couple where it doesn't do that, I still believe in the asset. I have no problem with it doing that, but I could see the leverage could get really cooked if that ends up happening. And I'm not sure what to expect in that scenario.
I think that's a great point. It is a subtle shift to let's move on to that point, because I think it is really important. And that I think you're talking about here is Sailor raising all of this money, like continually buying like another $1 billion of Bitcoin last week, which is like, awesome for Bitcoiners in some sense, watching him keep plowing the money in. But look at the way he's raising the money. It's using this STRC. He's offering 11.5% interest payments on it. And the bet, and you articulated this really well, which is essentially he's betting he's going to go, look, I'll borrow at 11% or 12% because I believe, this is me being Sailor, I believe that, Bitcoin is going to return 30% CAGR for the next 20 years. And so I'm willing to pay 11%. Mm-hmm. And that's just his bet. Like that's just the bet of anybody that owns MicroStrategy stock fundamentally, right? But equally, it might not. And if you're loading up on debt and your interest payments are that high, and Bitcoin returns don't exceed that, you're going to get punished. You're just going to be losing money. And actually looking at this public as well, we were going to talk about Tesla as well, because
totally. Let me pull it up here.
Which is, by the way, I mean, Tesla, just from a retail perspective, it's a really interesting one, because it's had this pump. It's had a really good pump, obviously, in the last 15%.
Yeah, last week has been crazy. It's
trading at like, go to the PE ratio. Actually, can you just click on that tab up the top? Next to price, it's 365 times earnings it's trading at, which is like, it's so
wow.
It doesn't like this is, it's like the Tesla effect, or the Elon effect is, we're going to take the valuation of your company if this is a normal company, and then if you've got Elon there, we're just going to add like 800 billion. Like, so it doesn't make any sense. But the pump is in. It's done really well, and you were going to mention that.
Yeah, that's hilarious. Yeah, 100%. Yeah, I mean, with the stock, I was going to bring this up earlier, but the stock market all-time highs. A lot of different plays out there are really doing well. Tesla being one of those. Let me go back to the price here. In the last week, obviously the markets have just come roaring back. And it's a good opportunity for traders out there who are looking to capitalize on quick volatile action. Big shout out to Rex Shares for offering some of those. If you guys haven't already, check them out. There's a link below the stream. I highly recommend you guys have a look. They've got all sorts of cool ETFs to trade. One of them being TSLT, 2x long, Tesla Daily Target ETF. Really crazy stuff, because if you're confident a trade's going to pan out well, and you want to roll part of that play into a 2x play, you're obviously going to be double upping on your gains here. So while Tesla's up a clean 15%, you've got TSLT up 30%. And so for the traders out there, there's crazy opportunities. So definitely recommend you guys check them out. Rex Shares has a bunch of great options here if you're out here trading. Like I mentioned, there's all sorts you can get into on the crypto side. There's thematic ones, there's income, there's leveraged ones, like I was mentioning, all sorts of different plays, even the Bitcoin ones. And so, yeah, big shout out to Rex Shares for sponsoring the show. Again, that link is below in the tweet below the stream. If you guys are watching, highly recommend you guys check it out. Big shout out to them for sponsoring. Just want to make sure to get this in there. If you are an investor, just carefully consider a fund's investment objectives, risks, charges, expenses, all that before you invest. The fund's prospectus and summary prospectus contains this and other info about Rex Shares. If you want to obtain that prospectus and summary prospectus, visit their site, like I said, at rexshares.com. Definitely read carefully before investing. Super excited to be working with Rex Shares, one of our longest running clients. Again, that link is below the stream. But yeah, dude, crazy stuff on Tesla. And I'm sure there's a few other stocks that have really outperformed in the last few weeks here.
Yeah, well, I guess it's an interesting one because it's a high beta stock.
Yes.
And it's the, everything's got a pump. So Tesla gets a pump. And then you can imagine, obviously, if you were to invest in, a 2x play like that when it's risk on, yeah, it runs hard. Of course, when it's risk off, you're going to cop it, right? So you need to understand, when you're trying to make these, if you're going to make a trade like that, understand what you're doing, understand the risks that can happen. And actually, it's always good to just literally look at historical price action, because then you can get a feel for what happened. When Trump sent this tweet out, what did the price movement actually do here in that situation? You can oh, gee, or like, whoa, look, it really ran hard here. I mean, I remember, I do think about and I'm not saying I'm touching this now. I'm really not. But those 2x MicroStrategy ETFs.
Yeah.
In October/November 2024, they did a 5x in 3 weeks. When Bitcoin was running hard, MicroStrategy was leveraged, so it was running harder. Leveraged MicroStrategy was running even harder. And of course, if you hold it over the long term, you're gonna get killed, right?
Dude.
So exactly.
Oh my God.
Yeah, it was an absolutely monster. And it's not the kind of these things are not the kind of thing you can just hold. You're gonna get killed if you just
Yeah, exactly. I mean, you're looking at here. Yep.
100%. Yeah, you can't.
Luckily, though, there is a 2x short. If you're going to play the other end of it, you've got the 2x. You've got MSTZ, which is the inverse one. If you're hey, I'm taking the other side of that trade, now it's time to hedge myself. You've also got that option.
Yes, but you can't. Even still, you can't really. You really shouldn't be. These are not the right vehicles for investing over a year. They're very much they're very much
there you go.
Tactical news plays, tactical thematic plays. This thing is gonna, if you are really bullish over a short time period or really bearish over a short time period, that's when these vehicles can be effective as a trading vehicle. They're not the kind of thing that you would hold along. And equally, it's honestly, it's not that dissimilar to, you wouldn't go on Binance and take a leverage short or a leverage long of some token and expect to hold it for years on end.
Yep.
It's a similar idea, right? It's a high volatility play. It can work over a short period of time. Over a long period of time, it's going to bleed out. It's not going to work. Over a short period of time, these trades can make money if you time it right. Of course, you get bent over if it goes the other way, but that's part of the game as well.
100% part of the game for sure. For those who are watching, those kind of plays definitely worth more as a trading instruments. And if you have an edge and you're trading, which I recommend, if you're trading, you get an edge first before you just enter position without knowing if you've got. That's basically how it is with trading. Every good trader I know says, "Look, I don't enter a position unless I'm confident I know something, and I'm gonna look to exploit the market essentially." And so, yeah, for those if you're, and who was it? It was either Druckenmiller or someone along those, some legendary investor that everybody loves, and he was like, "Look, the way you win in this game is when you're fully confident in a play, you put your chips down and you make a play on it." He's like, if you're really confident and you make a big play, he goes, that has been the game for me. He's like, I've had he's like, you're going to be up and down in these markets. It's going to be a slow grind. He goes, but when you feel like you've got an edge, you've got a really confident play, you should go maybe not all in, but you should you try and hit a home run or a triple kind of thing. And obviously it's not always going to work out. And that's where you practice risk management. You've obviously got, a place where you're like, okay, my thesis was invalid. It's time to roll it back. So you're not going to roll it all the way down to the ground if you end up being on the other side of that trade. But 100%, man, there's tons of opportunities in these markets.
And I think his point is important in relation to when you compare that to a lot of it all comes back to incentives as well, and this is why it's tricky when you look at these some of these funds out there that kind of they so quote unquote want to get alpha, but they also are so attached to the benchmark that like they'll be investing in 50 stocks, and really what they want to do is S&P 500 +1 or -1 or something. And it's like they might be the smartest people in the world, but they're not. They really don't put their, you know, they're invested in 50 things, but they only like realistically nobody has 50 great ideas. Like they have 4 great ideas, and then they're just like riding the index essentially. So that's quite interesting, and
Yeah,
it brings
100%.
up, well, what are you paying for when you're investing? Like what's the alpha versus the fees that you're paying for, and this kind of stuff is really important. But yeah, man, I mean,
huge for the ETFs, dude. Like there's so many. Like I've talked to so many ETF guys now. That industry is so interesting to me, and like they're like, dude, there are so many ETFs where they just got a fancy name, and if you didn't even look into the portfolio, you'd think you're getting something that you're not. He goes, most of these guys, most of the opportunities just out there aren't worth their salt. Like check into the weighted holdings of all these ETFs. Just because it has a cool name doesn't mean there's anything impressive in there, or that these guys who put these ETF things together have any kind of edge. He goes, look, like do the research. If there's a couple companies that you guys think are doing some cool stuff and they've got an interesting portfolio, they're like, hey, like here's an interesting thesis. We think that, you know, I don't know, Chinese companies are going to be really big. So we're going to look for specifically AI companies in China or whatever, and or Korea or something like that. And so you can invest in different markets. And so just make sure you guys are doing your own research on these things. There's going to be 1,000 Bitcoin ETFs as well that come out, all different styles and different advantages to getting into them. Hopefully you guys are making a Bitcoin position if you guys looking to get some Bitcoin exposure as well. And yeah, I mean, we'll see how these things end up doing. We'll see how the ETF inflows and outflows do next week. Hope you all have an amazing day. And if you did enjoy the stream, by the way, definitely take a second, repost it, follow me, or follow the ETF tracker, follow Wolf, follow Thomas. We're all tagged right above your face if you're watching on X. If you want to find out more about Rex shares and their ETFs they're offering, again, that link is down below where you're watching. If you're on YouTube, it's in the description. We do this stream each and every week. And so I hope you guys give us a follow, and we'll see you guys all in the next one. And if you follow, you will hopefully not miss the next stream. So we'll catch you guys all in the next one, everyone. Take care and have an amazing night. See you.